Wise is the largest position in my portfolio. It is 30% of my liquid net worth. And I bought the stock because of the fundamentals. I bought the stock because of the story of what this company can be in the future. This US listing doesn't affect the story, doesn't affect the fundamentals at all. But it matters because I believe that this is one way that Wise can unlock value for shareholders, can create value for shareholders. I have been investing for 2 years. My average profit is around 40%, which is not that much. It can be bigger than that. And I believe listing the stock in the US can work. Of course, it also matters what the company is doing. A few years ago, Flutter Entertainment did the same thing. The stock went up, but after that, it crashed, both in the US and the UK. So it doesn't really matter where you are, you need to be a good company for your stock to do well long term. While the story of the company itself doesn't change, I still believe that in the long term, Wise can keep growing, they can keep having more banks into the platform. But being in the US make this story more visible to the banks that they are partnering with. There are over 4,000 banks in the US. The US banking industry is very fragmented. So many of these small regional banks, if they don't want to rely on the global banks, the correspondent banks like JP Morgan or Citi, probably it would be wiser for them to just join the Wise platform. In Europe, they have limitations, and Europe also has many neobanks, which is not really the case in the US. It's because the US banking system is so fragmented, there are so many regulations, it's harder for neobanks to develop. It's easier in Europe, and also Europe was far behind compared to the US. For example, the subscription model, the US already has it with American Express. I'm not going to go into the details. I'm already writing 4 articles about Wise. If you want to know why there is a problem that Wise has to solve, why Wise is solving the problem, the competition, why they're ahead of the competition, and also we are going to talk about stable coins. I would recommend you read these articles. For today, let's talk about this US listing. Another reason why the US listing can unlock value for shareholders, and this has nothing to do with the company, is the type of owners it will have, the type of investors it will have. If you're in the UK, many investors are looking for, let's say, 4% dividend yield. They are looking for this company with high dividend yield. If you look at the performance of the MSCI UK ETF, the price of the ETF is about the same it was in 2008. It means that investing in the UK for 2 decades did not make you any richer. But now if you look at dividends, then you see the returns, how much they are. It's because UK companies, British companies, they pay more dividends compared to US ones. And investors also look for these things, which is not the case in the US. In the US, companies can take more risk. I won't call Wise a risky company, but they can take more risk in terms of the business itself, entering new ventures, which is easier in the US. Trying to change the world, trying to do things like what Wise is doing is easier in the US. So this makes the story better, also brings better investors for Wise. And it's not just in the US, because if you're US listed, it becomes easier for people outside the US also to own those stocks. Many people I know don't own Wise because in the country they live, it's hard for them to buy British stocks. But it's easy to buy US stocks, and you don't even have to pay stamp tax. And finally, if Wise is listed in the US and particularly on the NASDAQ, then it will be on indices. Right now, it is not even on the FTSE 100. If you look at the smallest companies on the FTSE 100, market cap of £3 billion, and then you look at Wise, market cap of £10 billion, you would think that Wise should be on the index. There are dozens of companies smaller than Wise on the index, but it is not there. Again, because of regulations, of rules in the UK that make it impossible for companies having dual class of shares to be listed. That's one. Secondly, it's also because they have a premium listing, standard listing, and Wise had to choose the standard one because they had dual class of shares, and for many other reasons they had to choose standard. But you should be premium listed to be on the FTSE 100. So Wise cannot be there. It's not going to be on the S&P 500 in the US because it remains a British company. It's not a US company, but it can be on the NASDAQ index. As soon as it joins the NASDAQ exchange, it becomes on the NASDAQ index. And institutional investors, all these ETFs, all these indices, they will have to buy Wise. Of course, this is going to increase the price, the multiples on Wise, and it will be much towards the fintech companies in the US. It could also join other indices such as the NASDAQ 100 because you look at the size of WISE, 10 billion pound market cap, should be around 12-13 billion US dollars market cap. The smallest companies on the NASDAQ 100 are around 15 billion market cap. So eventually, if WISE keeps growing, can join this index too, which is one of the most famous, one of the most popular indices. It brings more liquidity to the stock, makes it easier for even the employees of the company to buy and sell their shares. WISE is one company that gives shares to all of its employees. So 5% of the company is actually owned by employees. And I'm not talking about the CEO, about the other insiders, the management. I'm talking about employees, normal employees. They own 5% of the company. So they can more easily trade their shares if they have more liquidity. Even if the fundamentals, the story of a company doesn't change, the fact that they are doing something with the stock, it can affect it. Nobody really knows what will be the effect long term. Maybe it doesn't do anything, but in the case of WISE, I believe it can unlock value for shareholders. There's a lot of hidden value in WISE. Another company that recently changed its share structure is Booking Holdings. They had a 25-to-1 stock split. I will recommend you watch this video next. Have a nice day and goodbye.